You probably didn't notice it happening. Most seniors didn't. But right now, quietly, the cost of staying insured in America is building towards something big, something that could arrive in 2026. Last year, a retired couple in Florida reached out to me. They told me their health insurance used to be $420 a month. Now their renewal notice says it may rise to nearly $700 next year. No major health change, no new coverage, just a bigger bill. And they are not alone. All across the country, seniors are opening letters like that, asking the same question. Why is this happening? Now here is the truth. It is not random. It is not just inflation. It is not simply the cost of living going up. This is a slow chain reaction that has been forming for years. It involves government policy, private insurance companies, and quiet budget decisions that most people never hear about until the moment it hits them. What we are seeing is the calm before the storm, a buildup of changes that could decide whether you keep your same plan, your same doctor, or even your same peace of mind. But I am not here to scare you. I am here to prepare you. Because when you understand what is really driving these costs, you can protect yourself before the system makes the choice for you. So here is what we are going to do together today. First, I will show you what is happening behind the curtain, the policies and business moves already set in motion for 2026. Then we will look at how those changes will affect real people, not statistics, but seniors like you or someone you love. And finally, I will share what you can do right now to prepare before the next open enrollment season arrives. Because the truth is, 2026 is not far away. The warning signs are already here. And if you think your insurance is safe because it has always been fine, I want you to stay with me until the end. You might be surprised by how much the ground beneath your coverage is about to shift. So take a deep breath, let us slow down and pull back the curtain together. Let us talk about how we got here and what is quietly waiting around the corner. Before we talk about what is coming, we need to look at how we got here. Because the rise in insurance costs for seniors in 2026 is not random. It is the result of many small decisions that have been building for years, slowly shaping the system we live in today. More than a decade ago, when the Affordable Care Act was created, it offered hope. It helped millions of older Americans who were not yet old enough for Medicare. It gave them tax credits and limits on how much of their income could go toward insurance. For a while it worked. The system felt balanced. Premiums stayed under control. But then life happened. The pandemic hit. Inflation rose, medical costs climbed. The price of everything connected to healthcare, hospital stays, prescription drugs, administrative fees, started moving upward faster than anyone expected. To ease that burden, the government expanded subsidies through temporary emergency programs. Those extra supports saved families hundreds of dollars every month. For many people in their 50s and early 60s, it meant the difference between staying insured or going without coverage. Yet here is the problem. Those supports were not designed to last forever. They were meant to hold the system together during the crisis. Unless Congress acts, those subsidies are set to expire at the end of 2025. And when they do, the shock will hit millions of older Americans almost overnight. At the same time, Medicare itself is under pressure. Rising costs, an aging population, and political disagreements are putting strain on the entire structure. Insurance companies are watching closely and adjusting before the government does. Some are already pulling out of certain states or ending plans that no longer bring enough profit. So when people ask, why are premiums rising? The real answer is layered. It is part policy, part economics, part politics. Each piece alone might not seem huge, but together, they form the wave that is building toward 2026. That is why I wanted to explain this now, while there is still time, because understanding what caused the problem is the first step to preparing for what comes next. Now, let us look closer at the first major pressure that will drive up costs: the expiring subsidies and what that means for millions of older Americans who are just trying to stay covered. The first big reason your insurance cost could rise in 2026 is something most people do not even know is about to end. It is the temporary financial help from the government that began a few years ago. Back when the pandemic caused millions to lose jobs and income, the government decided to help by expanding health insurance subsidies under the Affordable Care Act. Those subsidies made monthly premiums far more manageable for people who were not yet eligible for Medicare, especially those between 50 and 64 years old. For a while, that plan worked. It helped keep coverage affordable for older adults who were still working part-time or living on early retirement savings. It allowed many families to stay insured even when the economy was uncertain. But from the very beginning, these subsidies were not meant to last forever. They were described as temporary relief to help people through the hardest years. And now, time is almost up. Unless lawmakers in Washington extend them, those supports will disappear at the end of 2025. That means, in 2026, millions of Americans could open a renewal letter and see their premiums double. Imagine you are 62, self-employed, and paying a few $100s a month for health coverage. Without the subsidy, that same plan could easily rise to over $1,000. For someone living on a fixed income, that is not just a number. That is the difference between paying for insurance or paying for food and medication. The most worrying part is how quietly this change is unfolding. There are no breaking news banners or political debates filling the evening headlines. It is happening in silence, buried in budget discussions that most people never see. But for the people affected, it will feel like the ground shifting under their feet. This is why experts call it the hidden cliff. Because once those subsidies expire, the drop in affordability is steep and sudden. Millions of near retirees could be left hanging in that gap, too young for Medicare, too old for employer coverage, and too expensive for private plans. So when we talk about your insurance costs skyrocketing, this is where the fuse is lit. The countdown is already ticking. The only question left is whether Congress acts in time to stop it, or whether Americans heading toward retirement will be forced to face that cliff head-on. Now let us move to the next major pressure, one that even affects those already on Medicare. It is the shift happening inside the Medicare Advantage system, and it could change how seniors across the country get their care. Now let us talk about what is happening inside Medicare itself, because even people who already have coverage are starting to feel the changes. Across the country, large insurance companies are quietly pulling back from the Medicare Advantage program. These are the private plans that many seniors choose because they often include extra benefits like dental or vision care. But lately, those plans have become more expensive for the companies that run them, and some are deciding to leave certain areas altogether. In Minnesota alone, almost 200,000 seniors have already been told that their Medicare Advantage plan will no longer exist after this year. That means every one of them must search for a new plan, a new doctor, and sometimes a new network of hospitals. And they are not alone. Similar letters are appearing in mailboxes across several states. The message is simple but heavy. Your plan is ending. You need to choose another one. Why is this happening? Part of it is financial. The cost of healthcare keeps rising, and the government payments that support these private Medicare plans have not kept up. Insurance companies say they cannot continue offering the same level of coverage without losing money. Another part is regulation. The federal government has been tightening rules around profit margins and reimbursement rates, pushing insurers to cut costs or exit markets that are no longer profitable. For the people who depend on these plans, this shift feels personal. Imagine being 72 years old and receiving a letter that tells you your doctor is no longer in-network. The plan you trusted for years will not cover your next appointment. You now have to compare dozens of new plans, each with different terms, deadlines, and hidden fees. It is overwhelming, especially for seniors living alone or with limited access to guidance. The hardest truth is that these changes rarely happen because of a single decision. They are part of a chain reaction. Rising drug prices lead to higher operating costs. The government reduces payments to balance its budget. Companies respond by trimming benefits or withdrawing entirely. And in the middle of it all are real people, trying to stay healthy without losing financial stability. So when we hear about premiums increasing or coverage disappearing, this is where much of it begins. The Medicare Advantage shakeup is a sign that the system is straining at its seams. And unless new funding or policies arrive soon, more seniors will face difficult choices about their coverage, their doctors, and their future peace of mind. Next, let us look at another force that will shape what happens in 2026. It is the rising cost of prescription drugs, and how even a well-intentioned policy can end up shifting the burden back onto seniors. Now we come to another force that is quietly shaping what will happen in 2026, the price of prescription drugs. Over the past few years, the government has tried to take steps to make medicine more affordable for seniors. A new policy under the Inflation Reduction Act began to limit what drug companies could charge for certain medications covered by Medicare. On paper, it looks like good news. Seniors are supposed to save money at the pharmacy counter. But behind the scenes, another story is unfolding. When the government places a limit on what pharmaceutical companies can earn from Medicare sales, those companies often look for ways to make up the difference. Some raise the price of other drugs that are not under price control. Others push insurance companies to pay more in order to maintain their profit margins. And when insurance companies pay more, they almost always pass that extra cost down to you. It is like squeezing one end of a balloon. The pressure simply moves somewhere else. Studies this year have shown that while the average older adult may save a few $100s a year on certain medications, their overall insurance premiums could rise by even more. It is a trade-off that few people realize until they look closely at their statements. You might save at the pharmacy, but pay it back in your monthly premium. Another factor is the growing number of new high-cost treatments now entering the market. Advances in gene therapy, cancer treatment, and long-term care drugs are improving lives, but they are also extremely expensive. Insurance companies have to cover those new treatments somehow, and that means raising premiums across the board to share the cost. So when people ask why their monthly insurance cost is rising, even as the government claims to be lowering drug prices, this is the reason. The system adjusts itself. It always finds a way to recover the money it loses somewhere else. In the end, it is the same old story. The intention may be good, but the outcome often lands on the shoulders of the very people the policy was meant to protect, older Americans living on fixed incomes. Next, let us move beyond numbers and policies for a moment and talk about the human side of all this. What these changes actually feel like for real people trying to live, plan, and stay healthy in a system that keeps shifting beneath them. Let us take a step away from the charts and numbers for a moment and look at what these changes really mean in the lives of ordinary people. Because behind every policy and every increase, there is a face, a story, a quiet decision happening at a kitchen table somewhere in America. I recently spoke with a couple in their late 60s who live outside Phoenix. They have been married for more than 40 years. They worked hard, raised 2 children, paid off their home, and looked forward to a calm retirement. But this past year, they received a notice that their health insurance premium would increase by almost half. They told me that when they saw the letter, they just stared at it in silence. It was not just a bill, it was a question. Which part of our life do we cut to keep our health coverage? They now spend evenings comparing plans, calling hotlines, and trying to understand forms filled with terms that sound more like a foreign language than healthcare. Deductibles, co-payments, networks, formularies. For them, each word means another layer of stress. Then there is Mary, a 71-year-old widow in Ohio. She lives on her late husband's pension and a small amount of savings. When her Medicare Advantage plan changed last year, her prescription coverage no longer included one of her heart medications. The replacement plan covered it, but at a cost that was almost double. She told me she now cuts her pills in half and takes them every other day to make them last. When I asked if she told her doctor, she smiled sadly and said, "I do not want to be a problem." These stories are not rare. They are happening in every state, in every small town and suburb. And while policymakers debate over budgets, seniors like these are making choices no one should have to make. This is the part most news reports miss. Rising insurance costs are not just about economics. They affect mental health, relationships, and the simple feeling of security that older Americans deserve. It is the quiet anxiety of checking the mailbox, the fear of opening a letter that could change your entire budget. But here is the truth. Knowledge is still power. Understanding what is coming can help you take small steps now that will make a big difference later. So let us talk about what you can actually do to prepare, to protect yourself, and to keep your peace of mind before 2026 arrives. Now that we have seen what is happening and who it affects, let us talk about what you can actually do. Because even when the system feels complicated and out of reach, there are still practical steps that can help you stay one step ahead. The first thing you can do is review your current plan early. Do not wait until the next open enrollment season to check what your insurance covers. Every plan releases its updates months in advance, and many seniors only find out what changed after it is too late to switch. Take an hour this month to log in to your provider's website or call your agent. Ask direct questions. Will there be changes in coverage for next year? Are there new limits or fees? The earlier you know, the more options you have. The second step is to ask your insurance company or local Medicare office about upcoming policy changes. Many organizations already know what adjustments are coming for 2026 but have not yet announced them publicly. A short conversation with a representative could help you learn if your plan will stay available, merge, or disappear altogether. This gives you time to plan and avoid surprises when renewal letters arrive. The third step is to check whether your state offers extra help or savings programs for seniors. Some states have assistance funds that cover part of monthly premiums or help pay for prescriptions. These programs often go unnoticed because they are buried deep on government websites, but they can save hundreds of dollars each year. If you are unsure where to start, contact your local area agency on aging. They exist to help people exactly like you navigate the system. Finally, if you have family, talk to them about these changes now. Many adult children have no idea how fast insurance costs are rising or how confusing the system has become. A simple conversation can help them understand what you are facing, and they may be able to help research plans or compare coverage. Remember this phrase: information is protection. Confusion costs money. The more you know, the better prepared you are to make decisions that keep you safe, healthy, and financially steady. Next, let us zoom out and look at the bigger picture. Because all these pressures, from subsidies to Medicare changes, are connected by one thing: the structure of America's healthcare system itself, and how it has grown more complicated over time. Now that we have looked at each piece, let us step back and see the whole picture. Because when you connect the dots, you begin to realize this is not only about policy or politics. It is about how the entire healthcare system in America has evolved, and how the weight of that system is finally landing on the people least able to carry it. Over the last several decades, people have begun living longer. That is a good thing, but it also means that more Americans now depend on healthcare for more years of their lives. At the same time, the cost of providing care has continued to rise. Hospitals charge more for stays and procedures. Pharmaceutical companies invest heavily in research but expect larger profits in return. The government, faced with massive debt, tries to limit how much it spends on programs like Medicare. And insurance companies, caught in the middle, adjust their premiums to protect their bottom line. So what we end up with is a chain reaction. When one part of the system tightens, another part raises its prices to make up the difference. The people who feel that shift first are usually the ones living on fixed incomes, the retirees who cannot simply work more hours or find new sources of money. The truth is, this system was never built for balance. It was built for profit. Every link in the chain, hospitals, drug makers, insurance providers, is a business. That does not make them evil, but it does mean their first responsibility is not always to the patient. It is to their shareholders, their investors, and their financial survival. Meanwhile, government programs are stretched thin. Medicare, once considered untouchable, is now a constant topic in budget debates. Each year, lawmakers argue over how much to fund it, and each time the decision gets harder as costs keep climbing. That is why your insurance bill is not just about your personal health or your plan. It is part of a much larger economic puzzle. Every dollar you pay is a reflection of policy choices, industry pressures, and population trends that have been building for decades. This is the bigger picture. It explains why the rise in costs feels unstoppable, but also why awareness matters so much. Because when you understand how the system moves, you can start finding ways to move with it instead of being crushed by it. And that brings us to the final part of this story, the part that is not about fear, but about power. The power of being informed, calm, and ready for what comes next. We have covered a lot today. The rising costs, the expiring subsidies, the changes in Medicare, the price of medicine, and the stories of real people trying to stay healthy in a system that keeps moving faster than they can. It is a lot to take in, but here is the truth. You are not powerless. Awareness is power. The system works best when people do not pay attention, when they accept the next letter in the mail and think there is nothing they can do. But once you understand how it all connects, the policies, the companies, the government programs, you can start to make choices that protect you and your family. You can compare plans before they change. You can ask better questions. You can see the warning signs before they become emergencies. If there is one message I want you to remember from this conversation, it is this. Your insurance cost might rise, but your awareness can rise faster. Knowledge gives you options, and options give you peace of mind. So as we head toward 2026, take a moment to reflect. Ask yourself, what do I rely on right now that could change next year? Which bills would surprise me if they suddenly doubled? Who can I talk to today to get clearer about my coverage? Small actions taken early can prevent big problems later. And if this video helped you understand the road ahead, share it with someone who might need it. Maybe a friend turning 60 or a parent trying to make sense of their next Medicare decision. The more people know, the stronger our communities become. At the end of the day, this channel is not about panic or politics. It is about clarity. Because clarity gives people confidence, and confidence leads to smarter choices. Thank you for staying with me until the end. Take care of yourself, take care of your loved ones, and remember, in America, information is not always free, but it can save you thousands. Stay curious, stay informed, and I will see you in the next episode of America in Context.